ahead and get started with the recording. Looks like it just got started. Once again, Brian Wilson here, market strategist at Market Structure Edge. September 5th, we had made our way into September trading. Hope you guys are doing great. I don't know what September has brought for you. Late August brought a trip to Michigan for myself and my wife, and we took our junior back to college in Grand Rapids. John Cook, we went probably right past you in the Chicago area there as we were making our way up. Well, let's go ahead and get started. Got a few topics to unpack today. Just a couple of ground rules, just as a way of reminder. All questions are welcomed. If you could please just mute yourself during the discussion itself, that would be really helpful for everyone else as they're listening to the conversations. A couple more people coming in right now, which is fantastic. Well, I'll go ahead and get started with just a discussion about our daily trading ideas, and then we'll take it from there. So I'll go ahead and share my screen, and we'll pick up the discussion. And as I mentioned, please feel free. Looks like we've got a couple more people coming in. Please feel free to lob any questions our way. Love to have any and all questions. So we'll start with our dashboard and daily trading ideas. And part of the reason that I'm sharing this with you today is it's been a little bit of a challenge recently in the market. I don't know if you've noticed or not. Kind of hard to predict, on a daily basis with any consistency what the market's going to be doing. Ironically, perhaps not ironically, because we set it up this way, is that the daily trading ideas still tend to work even when the market can be a little bit challenging. So just as a reminder, you'll find the momentum names here. You'll find the low volatility names over here. And this is just the way that I kind of unpack the world. Everyone has a different way of going about it. But what I will tend to do is I'll just sort it by probability. And like I said, this is just my strategy. Perhaps it's just a way for me to watch a few less names every day. I'll look at the names that have an 80% probability or better. So that's just looking at recent trading conditions. How many times, has this name posted, gains during the next 1 to 5 days? And in this case, you're looking at the low volatility portfolio. I recently traded 2 different names. I had success in one, and I didn't have success in the other. Let me start with the name that gave me difficulty. It was a low volatility name. The name was fine in terms of the overall setup. We'll make our way down to our healthcare portfolio. I just want to share with you what I will adjust the next time I make this type of trade. So it's Merck, and here, let's see. And when I went into the trade at the time, intraday volatility is about 1.5%. So went into it at the latter part of the day. Let's go ahead and take a look at the setup right now. You can see that sentiment is fine. Short volume had been moving lower when I went into the trade itself. And part of the difficulty that I had
has nothing to do with you.
And excuse me for a second here. We'll have to mute everyone.
Please go away.
All right. So muted everyone there for a second. Coming back to the discussion. So what I did going into the trade is I set my stop loss 1.5% below my purchase price, and the next morning, maybe 2 hours into the day, I got stopped out. Guess what? 1.5% below, and then it started to rally after that. And today was actually doing pretty well. I took a lesson from that, at least with some of the low volatility names. There's inherently not as much volatility in those names to begin with. I'm going to set my stop loss just a little bit higher So in other words, if I was going into Merck at the end of the day today, I might set it at a 2% stop loss. That way, it would have to be an extraordinary down day for me to get knocked out of that name. If I was still in the name, I would be making money today. So, just a lesson there. I went into SoFi a couple of days ago. Show you the current setup here. And SoFi was down like 5% when I went into the name at the end of the day. You can see sentiment squarely pegged at 10, so everything good from a sentiment perspective. I believe it was probably here when I went into it. And short volume had been moving lower, so I placed the trade at the end of the day. I made about I think it was 1.8, 1.9%, and then just exited, out of that position. So made money on a momentum name, lost money on a low volatility name, but hopefully learned something in the process. And just as a reminder, with those daily trading ideas, and I'll share my screen again here with you. When we're looking at those daily trading ideas, it gives you all the parameters up front. And I think you're very familiar with that. But if you have any questions, please reach out, bw at marketstructureedge.com or at marketstructureedge.com or tq at marketstructureedge.com. But entry low, entry high, then it gives you the exit low and exit high as well, both for momentum and low volatility. And as you can tell, the fact that we only have one name in momentum right now is very telling. It's a difficult time presently in the market. I was actually right before this call. I was on a call with an investor relations team. It's an financial services company, and they actually have an arm of their company that has some portfolio management. And the IRO, and investor relations officer, had a discussion with one of their portfolio managers, and the portfolio manager had mentioned, to this lady how difficult it is for their team right now. That it's just challenging for them to predict, what direction the market's going to be going on a given day. So if the fact that professionals, portfolio managers are having difficulty, in this market environment, perhaps no surprise that sometimes it can be a bit of a challenge for us as well. I'm going to move into a section that I call sentiment above 6. This will be a review for a few of you. I don't spend a lot of time on it, but I just want to share what happens when we move above 6 sentiment. So we'll go back to screen sharing and move over to an Excel document that I keep. One of these afternoons, when I have a little bit more free time, I will update this. This document presently goes from January 2020, and it moves through March 2024. So what we're looking at here is we're looking at every time, move back to the dashboard for a second. We're looking at the instances when we move above the red line. The red line is 6.0 from a sentiment perspective, and you can see it was towards the end of August when we do so. So the question before us is, okay, we move above the red line. What does that mean for market performance? That's what we're unpacking here in this spreadsheet. So looking at, once again, a time frame from 2020 all the way through 2023, if we look at all of those instances where we moved above the red line, here's the number of trading days where it stayed above the red line. There's the performance during that time period. So that's what you're looking at here. And then once you move back through the red line, going back down again, what's the performance look like 2 weeks afterwards? So hopefully that makes sense, but you can see, we have some periods where performance was just, lights out. It depends on what was going on in the market at the time. As we scroll down this list, look at what was happening during the bear market of 2022. Very, very poor performance. So general rule, bull markets tend to do better. Bear markets tend to do worse when we move above that red line. But for the whole period, last three some years, 70 basis points is the average, and we tend to spend about 2 weeks above the red line itself. Bear market of 2022, we were down by about 70 basis points. Last year, we were up 1.5%. And the average for 2 weeks afterwards, 40 basis points. So one observation that you can make, and especially as you scroll through here, look for some of the best performing periods. Well, 3.6%, 3.7%. We had one that was just lights out. That was a little bit of an outlier. I think it was like 15.5%. So some of the general observations that you can make is as you move above that red line, what gets very difficult to continue to post gains in the market. It's just a general observation, but you can tailor your trading strategies accordingly. And look at what happened here as we moved above the red line here a couple of weeks ago. Well, it's been harder to continue to post gains. We kind of floundered into month end, got a little bit of a rally the last day of the month. Once again, when we move into the last day of the month, that's month end positioning. And we have, started off September, not so great. Part of the reason that we have started off September in not so great of a fashion, and I mentioned this in the market desk note today, is look at the change in short volumes. So short volumes have started to rise. In fact, that number right now, 5-day number is 50.7%. This is a report that you don't have access to, but I'll reference it once in a while. As of yesterday, the daily number, 51.4. So short volume is starting to rise across the market. We're tracking declining sentiment, increasing short volumes. That's what we call convergence. And it's a market setup that favors shorting the market and not being long the market. One other item to point out while we're on this page, look at look at short volumes that were basically stuck at 50% for about 3 weeks running. I had never seen short volume stuck in a range like that all the time that I've been watching this data. Typically, if you look at short volume over time, and let's look at it on a year-to-date basis, you might see periods where short volumes stick at a level for 3 or 4 days. There's 3 or 4 days, but the norm is for short volumes to rise and fall over time, not to be stuck in a given range. What was going on behind the scenes there? I don't know for sure. We don't have access to some of the strategies that are being employed there. But what we do see is, what was the result of basically a hedge being in place while the market was able to rally? When did that hedge go away? At month end. As soon as we entered a new month, strategies changed. I talked about an inflection point with today's market desk note. We reached an inflection point. Short volumes, started to increase at that inflection point. So let me stop sharing for a moment and see if I'm missing any questions. Stock volatility, Bill, that's on a daily basis. So it's intraday volatility movement from lows to highs on a given trading day. Let's see, Chris, click on view. Okay. I think that's everything so far. Any other questions that with the material we're going through so far? So we kind of talked about sentiment above 6, some of the daily trading ideas that we can unpack. Let's move over to big tech for a moment. And as you know, we spend a lot of time talking about big tech. There's a reason for that, and maybe I'll start with the reason before I go to big tech itself. I know John Cook does this on a daily basis. I've started doing it on a daily basis as well. You can download the SPY holdings. This is just a download that I did this morning, and you can track what's going on. I tend to track the top 15 names, but take a peek here at all the weightings, 1% or over. I believe that is 14 names. That's 38% of the market. Most of these names are your movers and shakers of the market, obviously Apple, Microsoft, NVIDIA, Amazon, etc. Sidelight about NVIDIA. You can see they're weighting right now 5.6%. I want to say about a week ago, maybe a week and a half ago, that number was closer to 7%. So that weighting has gone down an awful lot here just during the last week to week and a half. So that being said, let's move over to big tech for a moment and unpack what is perhaps going on. Well, I know part of what's going on right now, but the second part is going to be a little bit of speculation on my part. So take a look at big tech sentiment that is sliding. Once again, big tech is about a third of the weighting in the S&P 500. So as big tech moves, so will the market. If sentiment is sliding and it's south of 5, guess what's going to happen in the market? Well, the market's going to struggle. It's exactly what's been occurring. Now, what's the path forward here for the market? And I'll say by extension, big tech. Do we start to recover here? I don't know. If we look at late July into early August, you're looking at sentiment here that just really languished for a period of about 2 weeks. Guess what? The market languished as well. When sentiment started to revive, so did the broad market, and we had that basically 3-week rally into the end of the month. So two different scenarios here, two different pictures to paint for you. If we move into this type of environment again, well, we could have a period where the market suffers for another week or two. I don't know if that'll be the case, but we can see when sentiment was fully oversold for big tech, it took a little while to recover. Now, every time in the market is different. It may not play out this way this time, but you can see sentiment is fully falling. Will we have a little bit of a snapback rally, or do we get this type of trading action? I don't know, but that's part of what I'm watching from a big tech perspective, and that paints a little bit of a picture as we look at the path ahead. Let me stop sharing for a second. We'll go back, see if there's any questions. Trevor, one way that you can understand short volume, think of it as borrowed shares. And I'll share my screen again. I'll move over to the S&P 500 look for a second. Part of the reason that short volumes are so high across the market is that brokers no longer carry as much inventory as they once did. So this is the S&P 500. The 200-day average is right at about 50%, just a little bit below it, 50-day average, 49.4. So the way that you can think about that is that roughly 50% of trading is coming from actual borrowed shares. So if there's a buyer in the marketplace and they're looking to get a trade executed, about half the time that execution of the trade itself is coming from borrowed shares. And hopefully that makes sense. That's the way I like to think about it is borrowed shares. And what I like to do is just track it according to what the average is, either for the broad market as a whole, or go and look at a particular company and track it for that company. Let's take a look at big tech as an example, and we'll just take Amazon. So every company tends to have kind of their short volume norms. What is normal for Amazon is not going to be normal for Tesla or Microsoft or whatever it might be. So don't take something out of context. So supply for Amazon right now 37.5%. You know, what is Tesla 56.3. Don't make the assumption that Amazon is a better trade just because their short volume is 20% lower. Take a look at the actual trends for each stock and then kind of make an observation based on those trends. So for instance, Amazon, here's their trend line on short volume. Well, short volume right now is actually below trend, rising just a little bit, but still below trend. Sentiment has stopped falling at 2.6. Now, it could continue to fall, but for now, it's actually stopped falling. Let's take a peek at Tesla, just as an example, kind of a compare and contrast. Now, their short volume right now is at about 56%. That short volume trend line is actually going the other direction, but they're once again below trend. So think of it as borrowed shares and then go to each stock that you're looking at because each one is going to have a difference in terms of what's normal for them. One more example is Google. Google tends to have very low short volumes. And look at their short volumes trends over time. Let's call it upper 30s is kind of that trend line. And you can see their short volumes are actually really, really low at this particular time. So hopefully that helps, but just think of it as borrowed shares for trades that come into the market. For every share that's being bought in the market across the S&P 500, roughly about 50% of those trades are being executed through borrowed shares themselves. So hopefully that makes sense. I had one other area that I wanted to cover today, and it actually has to do with, and it doesn't look like I've missed any questions. It has to do with short volumes and what happens if short volumes continue to spike higher. And we'll shift back over to that dashboard look for a moment. So once again, here's short volumes that are just starting to increase, and recognize that the norm is that short volumes will move higher and lower over time. It's just the way that the market works. Now, what I want to pay attention to is what if this what if this just really starts to spike higher? Does that mean that the market is, going to really fall apart? Well, let's take a look at the last year at some of these spikes, and just to take a peek at what actually happened. And once again, let's look at what those levels were, just for context. So 51.4% back in September. This number, 51.5%. These are 5-day averages. This was back in March, and right now we're at 50.7%. So this is on a 1-year basis, but recognize that during the last year, we don't tend to get much higher than about 51.5%. What happens once we reach that peak differs every time, but you can see back here, the market kind of went sideways and then went lower. We look back here, market actually rallied for a brief time. Let's fast forward here. Once we reach that peak, market actually went into rally mode. Same thing here, market moving higher. What about here? Market moving higher. Here, well, the market was getting ready to move higher. So, general observation is that even though short volumes might get really poor, that when they really start to peak to the upside, that might be an opportunity to at least look at a short-term buy. So it was just an observation that I made this morning when I was looking at short volume levels and what happens over time. Let's take that look back just a little bit farther. That right there is 51.5. Let's see what it's been the last 3 years when we really spike at those higher levels. This looks like it was the greatest that we've seen. 52.5. And even there, you can see that the market floundered for just a little while. And then that was as high as those short volumes went, got some short covering. The market, recovered from there. So 52.5 is the highest that I'm seeing. Sometimes it gets up to around 52. So just wanted to give you a little bit of perspective in terms of one area to watch, and that being, those short volume levels. Brad, let's see what was happening here. How you actually pick up and manage a trade using Edge. Sure, absolutely. Let's go back just for purposes of the daily trading ideas for a moment there. Share my screen, and we'll take a look at one that I was watching. I think I have it on my watch list today. We'll take a peek at MKC. So every day I'll walk through this process, looking at momentum, looking at low volatility names. What I will do personally is I will try to look at names, and I'll just sort it by probability. I'll try to look at names that have a probability of 80% or better. That's just me. It helps me to look at a few less names each day in terms of the portfolio itself. So I was looking at MKC. I have it on my watch list. We'll go ahead and take a peek at that. And you can see that sentiment is stable at 5. Short volumes are low. And we look at the entry range. Probability right now is 80%. Ideally, I want to pick up this name between 81.33 to 82.56, and exiting 5 days would be my exit range. The names that I drop in my daily trading ideas, you can see MKC is one of those names right now. I'm looking at this one as a possible buy for later in the day. Ideally, I'm looking for names that are under pressure for picking them up. And most of my trading in individual names, once again, this is me personally, everyone has a different style. About 80 to 85% of the time, I will pick up those names the last 5 to 10 minutes of the trading day. That's the way that I approached MRK and SoFi a couple of days ago. But hopefully that helps. When we get a little bit later here in the day, I'll take a peek at MMC. Let me go ahead and show you that name. If a name has lost, part of its normal intraday volatility, but it has a pretty solid setup, that's a strong consideration for me. For Martian McLennan, we can see that sentiment, has been at 5 in the entirety of the period. Short volumes just started to peak up a little bit yesterday, but still below that trend line. And you can see it's been, from a pricing perspective, it's obviously been a very good performer here during the last few weeks. So that's part of what I'm looking at. Hopefully that was helpful, Brad. Any other questions that I can address for you today? Anyone want to talk into what they're seeing in the market right now? Happy to have people speak into that if they're interested. Cindy, how do we use volatility? Chris, I'll come right back to you. Okay, thank you for raising your hand. How do we use volatility to analyze a stock? So, in terms of volatility, I use it in conjunction with other tools. And what I mean by that is I will use it as part of our daily trading ideas. So you look at Bill as an example, and like your ideal position for using daily volatility would be picking up Bill when it has lost about half of its volatility. That's a really good entry point. So if it was down 2% today, that's a fantastic entry point. Now recognize that momentum portfolios are going to, by their very nature, have greater volatility. So especially if you pick them up, and I don't believe I'm screen sharing. I'm sorry. I do that once in a while when sorry about that. Um, so looking at Bill as an example, daily volatility of about 4%. Ideally, you're looking to pick that up when it's about 2% lower. That's an ideal entry point. Now, you don't have to do that, but look at today's closing or yesterday's closing price. uh, that's towards the high end of the scale here. So in other words, it's a little harder to make money if you're picking up names when they're higher already on the day. Kind of the principle, as much as possible, is to try not to chase shares higher. Especially, let's say that this name was already up 4%. Well, it's already higher than its normal volatility. What's the odds that it's going to continue to move higher from there? Not very much. So you do use that exercise both for momentum and low volatility. That's part of the reason I was looking at MMC is when you get a name that's lost about 1%, a low volatility name, that usually means that it's lost about half of its intraday volatility already on the day. Hopefully that answered the question. Uh, Chris, go ahead, fire away. And it looks like you're not muted, but I can't hear you right now. Chris, we might have to come back to you. Can I go ahead?
Can you hear me now? No.
Yeah, yes, I can. Thank you.
Oh, sorry about that.
You're fine.
Brian, thank you, Brian. I was going to ask, how do you do you tie SPY in with broad market sentiment? In your determination of how the market trending up or down?
Do we look at SPY as an indicator of what the market might be doing?
In relation to broad market sentiment, yes.
Not specifically in terms of pricing action, but looking at it, and then I'll share my screen for a moment. Looking at it more from that perspective of what is the market likely to do, or in this case SPY. And actually, when we were on this discussion a couple of weeks ago, I gave an example. We had moved above the red line, and I gave a sample trade at that point. Probably be a good time, if you have this capability to sell a call, because we know that the market historically is not going to go much higher. I mean, look at what's happened. It hasn't moved much higher. So in terms of looking at SPY itself, I don't look at the actual pricing of it in terms of trading signals, but I'm looking at it in terms of what is sentiment and demand doing. So with sentiment slipping right now, and with supply moving higher, short volume moving higher, this is a central tendency, but the market will tend to struggle in that environment until things start to firm up a little bit.
Yeah.
Did that answer the question, Chris?
Yeah, that's good. And I was just going to observe that there was only one in high momentum today, right. One stock, which is the lowest I've seen in a long time.
It really is, and that becomes very telling when we just get no choices, right? That the market is communicating something to us at that time as well.
Yeah, thank you.
You're very welcome. I believe there was a question about employment data. Does that influence your trade decision? Yes, Trevor. End of the day, right? Today, let's go take a peek at what the market is doing. Here's the day progresses. It was weaker earlier. It's been kind of bouncing around a little bit. So S&P down about 20 basis points. If the market were to tilt heavily one way or the other, At the end of the day, I might go the opposite direction, especially if the market were to rally. So we know that the central tendency right now is that the market supports declines right now, and that's what we've been seeing the last 3 trading days. If for some reason the market rallied and the S&P 500 was up 90 basis points, at day's end, I might put in a market short and I might hedge that. I did that a couple of days ago. I put in a 3 times levered trade on one side, and then I protected it with a 1 times levered trade on the other side. But you're right, Trevor. Things do get a little squirrely on big event days, so I try not to get too cute. If the market ends up in a very similar place to this at the end of the day, I probably don't do anything in terms of going long or going short. I don't see a reason for it personally ahead of big news. I'll look at something like MMC. I still might trade that individual names, but the broad market itself, with this setup right now, I would probably just leave it alone. But that's just me personally.
So Brian, I'm jumping on here and wanted
Hey,
to bring up. I wanted to bring up. So I have the tendency where if we have the risk off prior to the event, it's more likely that if that number comes out strong, that we just rally because the risk off has already happened, right? We've seen coming from that 7 number down to that 6.6 sentiment. And I made the point on Wednesday that those, Google, Apple, Amazon, those short volumes aren't terrible. So from my perspective, I see that we've had this risk off. You still have to be really careful when we have declining sentiment that I go, yeah, I'm not really going to look to touch that long. And I'm not going to try to hold it long through the announcement. But if you're looking to get it like a quick trip and we get positive news, I'm not going to be surprised. I mean, it's not going to go down on good news. That's what we know. But if it's bad news, you're going to be waiting for your trade to get filled while you lose money. Your stop, you run through your stop, and you're not going to be very happy with that. So, so I appreciate your perspective. Like, yeah, I'm happy to make money yesterday instead of wondering if we hit the mark tomorrow morning pre-market.
That's perfect. Henry, do you have any other observations just before we kind of close things out today?
No, that was my only other thing that I was going to add to what Brian said is all these things are central tendencies. And so if you were trying to guess which day the market was going to drop last week, it sort of bounced. We bounce. But we knew the central tendency. So I would just encourage folks who are using Edge to stay patient with their holding periods instead of trying to jump the gun and maybe think, oh, this trade didn't work on Thursday or it didn't work on Friday. Maybe it didn't work on Thursday or Friday, but it come Tuesday it worked really well, right? So predicting the exact day and knowing the exact day is difficult. Our central tendency is 1 to 5 days. So don't shy. Just to reinforce that point that it may not all happen in a day, and that's why those fast traders are so good at knowing the 1 day. So that was my only one point that I wanted to make is to be patient. And that's sort of preaching to myself.
That's good. Thank you very much.